Welcome to this week's Market Update, where we review the key developments that shape markets, highlight what drove our recent performance, and look ahead to important events on the horizon. Let's start with what moved markets this past week, beginning with the consumer who continues to hold up relatively well. Retailers, including Best Buy, Kohl's, and Dollar Tree, all reported stronger than expected results, showing that shoppers are staying engaged when they're offered real value. For our portfolios, this reinforces why we focus on high-quality, consumer-facing companies with strong brands and disciplined execution, the businesses that tend to win when consumers prioritize value. Markets broadly moved higher this past week, with both stocks and bonds gaining as investor confidence improved. The S&P 500 pushed towards record levels, while Treasury yields eased modestly, and investors were willing to take on even more risk with mixed economic data. This kind of constructive backdrop is exactly why we build diversified portfolios positioned for long-term growth so clients can participate as the confidence broadens across the market. Closer to home, Canada's largest banks delivered another round of strong earnings, powered by rising markets and active trading that lift their capital markets divisions. Several banks also raised dividends and announced share buybacks, signaling confidence in their balance sheets and long-term profitability. With wealth management and core banking holding up well, these results reflect diversified, well-run financial institutions that we like to own. Now let's look at what drove our performance over the past week and focus on why we remain confident in our current positioning. Booking Holdings was a standout, gaining 7.28% as investors responded to resilient global travel demand, especially across European leisure and premium international trips. Booking runs an asset-light model that generates strong free cash flow, and it keeps expanding in alternative accommodations and AI-powered travel personalization. We own Booking because it captures durable demand as consumers continue to prioritize experiences, making it a high-quality holding with real earnings power. The information technology sector again led our performance, with Qualcomm surging more than 15%, along with solid contributions from Apple, Meta, Amazon, SAP, and Taiwan Semiconductor. The strength reflects continued enthusiasm for artificial intelligence, cloud spending, and a recovery in semiconductor demand. While valuations are elevated, we remain comfortable owning established technology leaders with strong balance sheets and durable long-term growth. Our size strategy was another strong contributor, as investors favored large-cap companies with stronger balance sheets and greater earnings visibility. Giants like Apple, Qualcomm, Meta, Amazon, and of course Booking Holdings all benefited from a market that rewards scale, liquidity, consistency, and profitability. We continue to emphasize high-quality, large-cap franchises because of their size and resources, which let them navigate change while protecting the advantages that drive long-term returns. Looking ahead, here are the key events that we're monitoring in the week to come. On Tuesday, June 2nd brings the latest job openings report. The most recent reading showed openings of 6,866,000, still above expectations with hiring rising 5.6 million. Steady demand for workers supports both spending and corporate profits, so it's an encouraging signal for markets. On Wednesday, June 3rd, brings the ISM Services Index, which measures activity in the largest part of the economy. The last reading was 53.6, which was comfortably in growth territory, though the prices measure has been running hot at 70.7. We'll be watching for clues around inflation and the path of interest rates. And on Friday, June 5th, brings the headline jobs report. Last month, the unemployment rate held steady at 4.3%, which was in line with expectations. Because employment drives spending and earnings, this report often sets the tone for markets, and we'll be watching it very closely. As always, we remain focused on what matters the most, helping you achieve your long-term financial goals through disciplined investing and thoughtful portfolio management. Thank you for joining us, and we'll see you next week.